Okay, guys, so now we understand the key drivers for getting trade ideas. We understand we have to look at the market's expectations for interest rates, so the break-even inflation rates. We have to monitor very closely what's happening with inflation now. Is it above or below the central bank's targets? And are these expectations for inflation likely to cause bond yields to go higher or lower? And as we know, that affects the currency's value. And are the markets betting on interest rate hikes or cuts by the central bank, which will make the currency attractive or unattractive to trade based off the interest rate differential compared to other currencies? We looked at commodity prices because we know that's going to have a big impact on currencies that are exposed to commodities. So now that we understand that fundamentally, what we want to do now is we want to have a way of just getting all our trade ideas into one place. So this is what I use personally with my spreadsheets when I'm getting trade ideas. So what I've done is I've automated this spreadsheet to basically take the data from each column for each country, and I'm summarizing the currencies I want to be buying and the currencies I want to be selling. So we have, for an example, green means I want to be buying these currencies potentially, and red means these are the currencies I want to be selling. So I want to be basically funding these investment currencies with these currencies here. So I want to be selling Swiss francs, selling Japanese yen, selling euros to buy these currencies, because again, interest rates are low in Japan, low in Switzerland, low in Europe. So if I buy currencies that are raising interest rates or expected to, it just becomes a very profitable trade for me. So let me just break it down for you here. So for an example, I'm interested in potentially buying the US dollar. Why? Because inflation is way above the central bank's 2% target. And as we know, the bond yield, which I showed you in a previous video, was causing the dollars to get stronger in the early parts of the year. So if this yield keeps rising, then we know that with the dollar, we're likely to get very strong against the euro, because we know the European bond yield is very low, as we can cadence the year, -20. The Swiss bond yield is very low, -16. The Japanese bond yield is very low, 0.05%. So the differential would attract money out of Europe, out of Switzerland, out of Japan, and into the United States. And that would be a really good trade idea. So as you can clearly see, the UK, again, the reason why I've highlighted the Great British Pound as potential trade, because of the expectations for inflation reaching 3.27%. So again, that's above the central bank's target. So the bond yield could be the reason why the pound starts to get stronger. So I can start to see the ideas behind some of the trades. The New Zealand dollar, why am I interested in buying New Zealand dollar? Like I showed you, markets are betting on an interest rate hike by the central bank to be coming quite rapidly. So again, we are betting that the currency is going to be getting stronger. So we want to be buying the New Zealand dollar in the currency markets. Australian dollar, I looked at a potential trade because of the bond yield. So as I showed you in the previous video, Australia's bond yield was getting very strong, and that's why the Aussie dollar was getting stronger against the Japanese yen. Remember, I showed it in the previous video, and was only because the bond yield hasn't been up to go higher since that the Aussie dollar has stopped getting stronger against the Japanese yen. But if that does keep going higher, then again, potentially that could be a trade, and that would be based on inflation in Australia. Canada, markers the current rate of inflation 3.6%, way above the central bank's target. So we're getting the bond yield to be the reason to buy the Canadian dollar, and markers are betting on interest rate hikes in May as well in Canada. Norway, we're betting on a rate hike in September. So again, if interest rates are going higher in Norway, perfect opportunity for us to buy the currency. Russia ruble, inflation above the central bank's target, and we're expecting interest rate hikes this year. So again, that makes the currency attractive. And I've already highlighted why we don't want to be buying the euro, but we don't want to buy the Japanese yen, that we don't want to be buying the Swiss franc, because interest rates are very low. We lose money if we buy these currencies against other currencies, so it doesn't make sense in the market. So this is how we generate my trade ideas, basically, guys, okay? And again, I put the manufacturing data here as well, because as I said, if it's above 50, that's good. That means that the economies are growing, for an example. And this is just the fundamental way of putting it all into one place. So what I've done over here is I get all the central banks, and I talk about all the central banks which are hawkish, which basically means likely to raise interest rate hikes, interest rates with hikes, and I put the dates of when they're going to do that. I put the central banks that are dovish, which basically is are not raising interest rates anytime soon. So Japan, such as in Europe, that's how long before markets are expecting any rate hikes. And for an example, other fundamental reasons, which are a bit more advanced for this beginner's course, about central bank policy, also for why I'm neutral on what they're doing with their policy over here. So then what I do, guys, I put all my trade ideas down here. I've got all the trades I want to be buying, all the currencies I want to be selling. And again, I've given my reasons. So I only buy Natasha ruble because of rate hikes. Mexican peso because of interest rate hike expectations. Brazilian real, rate hike. I might potentially want to buy the US dollars I was talking about because of inflation and the bond yield. So I'm basically, when I come over to my spreadsheet and I look at this, I know fundamentally, okay, this is a really good reason for why I want to be taking these trades. These are the funding currencies. And why are these funding currencies? Again, low interest rates, low yields on bonds, not attractive currencies to be trading. So this is how, guys, we can always update our spreadsheet. Well, this is how I always update my spreadsheet to keep myself on top of what the markets are doing, what the markets are expecting. And that gives me a place to come over on a spreadsheet, have a look at the markets and be like, okay, cool. I understand what's going on. I understand what markets are looking at. So this gives me a trade idea when I'm looking to get into the market and trying to jump into some trades. I'll make a profit. So hope that makes sense, guys. But this is how you draw out and analyze the markets to get trade ideas when you're looking in the currency markets for trading opportunities. Thank you.